The upcoming trading week kicks off with a number of big economic reports out of China that could have a significant impact on trading. Over the last month or so, we've seen concerns about the health of China's economy weigh dramatically on commodity markets. In particular, we'd seen crude oil retreat dramatically. We'd seen copper and base metals also come under a lot of pressure. They've started to come back in the last 2 days, but we could still see sentiment get impacted by what happens with China's numbers. If we look here at 10 p.m. Eastern Time Sunday night, which is 7 p.m. Pacific Time Sunday night, noon in Australia on Monday, we get the China retail sales, fixed assets, industrial production reports. Streets expecting 10.8% retail sales, streets expecting 7% industrial production. If we go back a month ago when these reports came out, retail sales beat the street as well as industrial production. Even then, people have still been concerned about China's economy. So let's see what happens this time around. If we look in between, manufacturing PMI was down over month and short of expectations. Non-manufacturing PMI also declined over month. When we look at China's trade balance here, the imports were 11.9%, so a slowdown in imports, and we also saw a slowdown in exports, even though the trade balance itself was better than expected. Last week, we saw a slightly higher than expected consumer price index and increasing, but we saw falling producer prices, so these reports were mixed. Overall, where traders could be looking to these reports for an indication of which way China's economy is heading into the spring. Looking at a few markets, one of the first ones that's likely to see a big impact is crude oil. Crude oil had tumbled dramatically over the course of April, but it did get washed out about a week ago with that big plunge below 45 down to 43 and back. Bear trap bottom, big washout, and we've since seen crude oil starting to trend upward. It had gotten oversold on the RSI, selling pressure starting to ease. Bit of a pause here on Friday around 47.50. First resistance around 48, then around 49, which is also the 200-day moving average for WTI. Brent also benefited from the recovery. It had plunged down to about 46.50 and has regained the $50 level, so it's been starting to turn around. Also here, keeping an eye on crude oil. Crude oil peaked back in February, and it's been generally trending lower for about 3 months now, but it also appears to be picking up some support in this 245 to 255 area. There's a Fibonacci cluster in here. For it to break out, it's got to get through that, but at the same time, if we look down here, around 40 on the RSI, we're continuing to still get support for copper. So it does appear as though this recent downdraft might be over and it's starting to pick up, but it still has quite a bit of technical work to do to signal an upturn. Not only are we likely to see action in commodity prices, but also in resource stocks and currencies, and also in China stocks. So let's start here with the Hong Kong index. Hong Kong has actually been on the tear for the last month or so. It's nearing overbought, so we'll see is it ready for a correction, but it's cleared 25,000. It's advancing up towards 25,250. First support would be around this 25,000 level, and in terms of retracement, and then following that, about 24,560. Looking on the upside, we've had a pretty dramatic move up. There was 23,800. 24,800. Next measured resistance probably around 25,800, give or take, but that might be a bit of a stretch in the short term. You'd probably need. Also, the thing to watch for is we have seen other indices around the world roll over. This is one that's been outperforming lately, so it could also be active around these numbers. Also, because of the knock through on resources, we'll be taking a look at Australia. I noted with Hong Kong that it's been outperforming. Look at Australia. It's not breaking out. We've got a double top in here, and you might even be able to call that a weak head and shoulders top possible. RSI has rolled under 50. The index for Australia is rolling under the 50-day average. First support about 5,800, then around 57.80. So, which of these two is right? Are we seeing the stocks rolling over like we're seeing in Australia and in the U.S. and in a number of other countries, or are we seeing the potential for a rally like we've been getting in Hong Kong and the U.K.? So that's the thing that could get sorted out on Sunday night and Monday as we see the reaction to this news. Finally, if we look at resource currencies, similar to the commodity we see here with the Australian dollar, has been under pressure along with commodity prices for the last couple of months, but appears to be forming a base here between about 73.30 and about 74, maybe let's call that 74.25 or 30. And then you've got a Fibonacci cluster in here, and then the 75-cent round number. So again, it still faces some resistance to the upside, but at the same time, it does appear to be stabilizing, and that the worst of this sell-off might be coming in, might be in place. If so, we've got a potentially higher low here, which could also be encouraging. So, China's economic reports could have a big impact on sentiment to start the week. We do have other reports through the week coming out that could also be significant, such as Japan GDP and Australia employment, as well. There's a number of numbers coming out from the UK throughout the week too.